Hello, Warriors. How's everyone doing? Hi, Alexander. Ingmar, how's everyone doing? Everyone okay with the dollar sell-off yesterday? Hope we're okay. I think, hey, guys.
Good morning, Dave. Good morning, everybody.
Good morning. How are you, buddy?
Yeah, good.
So, does it mean anything to you that the dollar made new lows without U.S. dollar yen yesterday?
Without dollar
And
yen,
still,
it's pretty low.
yeah,
Right?
without, yeah. So, here's the dollar taking out the lows and U.S. dollar yen putting in a higher low than where the dollar.
That you mean?
Yeah.
Yeah,
Anything?
it's all relative. Yeah, all percentages.
Okay. And the breakout or the failure, euro. Euro's momentum at new highs is pretty weak.
Yeah, I think we've been talking on the flow show about how important this week is for the U.S. labor market, and I reckon the market is kind of waiting to see if it gets any confirmation of weaker readings before taking the euro back up. Yeah, we are around this 109.30 zone. That's the one, and then the 109 the figure, I guess, as well. If that gives way, then it's probably going to consolidate for a little longer. Yes, one and all has to do with risk as well. I think the euro crosses are higher, but then, well, barring yen and Swiss, but yeah, euro dollar, there's this correlation effect of the dollar perhaps not doing too badly when the stocks are going lower, but we may be on the verge of that to change as well. So I think the market is waiting for signals here ahead of Easter.
Yeah, Friday could be a decisive day with it being closed.
Decisive
with the NFP. With the NFP.
I mean, decisive, crazy, ridiculous. You whatever word on it. I don't know who took the decision to keep it on Friday, but that's really ridiculous.
All right, this is why I say don't buy dead cat bounces, short them. So there's cat yesterday.
That's your cat, your dead cat.
That's what happens to a dead cat bounce.
Yeah.
It gives back everything in a day. Okay, so you could call that a bear flag. They could try and rally it, but there was a lot of damage in the market under the hood yesterday. Besides copper breaking down, I mean, here's Freeport. It could be a failing rally, but this move in copper, I know we've gotten a lot of false signals, breakdowns and breakouts, but this looks pretty decisive to me in copper. And I think that's a comment on global growth. Probably while the Aussie is, failing from 68, it looks like that's it at 68.
Yeah. And that may be it. And combine it with pretty mellow RBA. Aussie really got hammered. Through the dollar, through the process. When you just look at it, it's weak. I'm not very positive on the Aussie, to be honest, right now.
What do you think, Jane? I see you here. Just kidding. Unless you want to come on.
Hey guys.
I thought I'd throw a little electric shock her way. Huh? Jane, I know you're listening. Unmute your mic. Maybe she will one day. How are you, Stel?
I'm very good, thank you. I'm very good. It was a powerful move yesterday.
Wow.
That's made, we were talking about this earlier with Kay, it's made ADP into jobless claims as well, and obviously NFP on Friday a lot more important, because let's face it, the job market has been the one thing that's been consistently strong in the US for the past post-COVID, even as inflation has been going higher and everything else is starting to look weaker. So if that looks like it's going to change, and the Fed, Jay Powell has explicitly said that they are looking at employment very carefully, and if that turns, that's going to be a signal for shall I say it, easing. If employment falls, I think then the Fed will have to converge, maybe not do exactly as the market is pricing, but converge to what the market's pricing, which is cuts coming up. I don't think we're going to see 75 base points by January, which is what the market's pricing.
How about in the middle, Stel? How about a pause? That would be a step. I don't think he's going to go right to easing, but a pause, would that be bullish for the market, a pause?
Well, a pause usually precedes reversal of the previous cycle. So that the market's going to take it as a bullish event, I think. But I agree with you. I know he's going to pause, he's going to wait, and really the crap has got to hit the fan for them to really start cutting. So,
yeah, like 3,000 S&Ps. I don't think they cut. We're not exactly at emergency levels in the market where they're going to use that ammo.
Yeah, and as long as inflation keeps dropping towards target, I'm not saying it's going to reach target, but as long as it keeps dropping towards target, the year-on-year inflation, I think that's going to make them more at ease to hold and stay there.
Okay.
But let's see. Right. It's going to be a very interesting Friday for sure.
So, I mean, every market's closed, not even open in the US. Not one market is open, right?
Not 100% sure. I think I need to check. I
scheduled an interview for Friday.
Oh, wow.
I thought we were open. Anyway, let me know. Like I say, and remind me too. So why don't we bring I think Steve's around.
Steve,
you make
Steve.
Scuba Steve, I know.
The guy with the Russian accent, one guy said. Who's that guy with the Russian accent?
That's a good question, actually. Comrade.
Do you think yesterday was significant in S&Ps in any way? Or just
outside black candle is interesting as a reversal candlestick. Okay. Now, for the time being, I just think that the market obviously had run a little bit ahead of itself, right? But have we invalidated any of the bullish breakouts that we've seen recently? No. So I would refrain from reading too much into yesterday's reversal, not for the time being.
Okay.
I think
what would give you confirmation that yesterday's candle meant something, closing back under 4K?
First of all, it definitely might have meant something, but I'm implying that something might be just a few days of a corrective pullback, right? So the question is, when do we read anything more than the beginning of a possible short-term pullback to this? Below 4,000, but below 4,000.
4,000, okay.
Hmm.
Okay. So there's a kind of a confirmation level from Steve in S&Ps. Take on the dollar, Steve. Are we going to gun for this low? Or are they going to try and dig in their heels?
The dollar definitely is showing for quite some time now signs of weakness.
Yeah.
Since a little bit after we topped in what was it? End September, October. What was it? At the very beginning, the move lower was unfolding in a manner that could have been corrective, but after a point, the drop lower in the dollar started having impulsive characteristics, and the rebound we recently had in the dollar had clearly corrective characteristics, right?
Yeah. So how about now?
I think that once we broke through 102 as well, things are not good for the dollar. I think we should be resuming lower unless we see. I think the only thing that can save the dollar at the moment is probably some kind of resurfacing either of the banking issues, right?
Okay.
That will
risk off is the only thing that'll save it.
Not any type of risk off, to be frank, though, right?
Okay. What kind?
Either severe risk off or the type of risk off that puts question in, the health of the financial system, as we had with the banks, etc. Because if it's some kind of a mild risk off, the dollar can still keep depreciating while equities are pulling back, right?
I would ask you if you want to buy euros, but that's what you have in your checking account.
That is somewhat true.
He has loads
He's
of
got
euros.
so many euros that why would you want to buy any more up here at 109?
In general, I have to say that the euro is looking healthy, right?
Yeah.
We had a corrective pullback, one that started in at the beginning of February, and we bottomed out at mid of March, and we've broken out from it. So for the time being, I think the euro looks okay against the dollar, right? I mean, I'm not enthusiastic about the euro or the ECB policy, obviously.
Hey guys, good morning.
Hey, Blake.
I hate to interrupt you, but we have ADP in just a few minutes, so maybe we should take a real quick look at just some of the key markets ahead of the data.
Grab them, bro.
Yeah, and
grab them by the data.
By the data. Yeah.
Yeah. Good morning, everybody. Grab. Did you say grab everybody by the data?
Yes.
I said grab them.
All right, really quick. I want to and good morning, Steve. You know, one of the things about I think that the outlooks of the dollar, it's the market is so persistent right now that they believe that the Fed is going to pivot and eventually cut rates. That the weaker the data comes in, you know, especially if this ADP data comes in weaker here in a few minutes. The dollar is going to sink and stocks are going to rally because people believe the Fed's going to eventually pivot. And I don't know how long it's going to take for the market to come to the conclusion that the Fed's not going to pivot until inflation continues to, you know, get towards their target. And so therefore, when you guys ask about how the dollar can do, I think the dollar can continue to sell off, especially if the data starts to weaken here. Right.
That is true.
Yeah. So anyway, here's yields. Take a look at yields really quick. I mean, this is from this week, but you can see, you know, we're approaching, you know, the lows in the 10-year yield. And I think that's going to be really important as we head into today. Hey, Stelios, just to address, or Dale, to address your question, the stock market and the bond market is closed Good Friday. And the only markets that are going to be open are the FX markets, which, you know, during
will be liquid.
It will be illiquid and won't be moving. I mean, no one's going to, unless there's some headline, you know, moving event like, you know.
So should I reschedule that guy?
I think so.
Yeah.
I think you're going to have very limited.
I don't think we're going to have webinars that day. That's what we said, Blake, didn't we?
Yeah.
I don't think. I think you'll be. Yeah, I think you should reschedule. Put it that way. No one's going to be listening. I mean, you can do it if you want. Just kidding. But no, I think it's going to be better off for everybody. So, all right.
I'll take it off.
Thank you. Real quick, we got less than 2 minutes before the data comes out. Kman, what are your thoughts here as we head into ADP? Stronger, weaker number? Any opinion?
No, I don't have any opinion on the number, but we were just saying on the flow show that this week is mega important for the US jobs market because we have so many out. We had the yields yesterday, we had the ADP today, Challenger layoffs tomorrow, and the weekly claims, and then we have the NFP on Friday, and it's going to be a big week. And I'm with you there. Is bad data is bad, and we saw the. We are now, I think, entering this zone, and that's what we saw in the yields yesterday, because it capped not only the yields and the dollar, but it also capped the equity markets a bit. So, and I think we're entering that kind of zone now, where bad can be bad overall.
Absolutely, and just to add to the employment picture, I mean, the ISM today is going to also be important for the market's going to be looking at the employment component of that number as well. So lots of things. And I as an American, you know, I think that we are seeing a tightening of the job market is going to start to look a little bit grimmer, you know, and we've been saying that for the last couple months that it was strong, but we are now starting to see some signs of weakness. So anyway, data should be out here very shortly. We got about 15 seconds. Market's looking for 200. You should see the data come up here. We have the S&P to the far right. We have the dollar index right in the middle. and the 10-year yields right to the left. And I think the dollar yen is going to continue to be most influenced by the yields over there on the left. So
The number is bad.
Weak 145. You saw it pop up here. Dollar index a little weaker. Stocks are enjoying it. But when does weak data turn into, you know?
I mean, it's
Bad.
ADP, right? It's not the main number.
Yes, it is.
Correct. This is the private jobs number.
Yeah.
Correct. I don't know. I'm wondering when weak data is going to be. Oh, look at the dollar yen is absolutely following yields this morning. Let's go over to the yields. And one of the things about the yen, I want to talk a little bit about this. Is the yen pairs are all starting to roll over pretty good. So here's the dollar yen pressing against the 618 retracement. You can see it's 131.20. We start breaking below that, and I think we're going to revisit the 130 level. I know Ryan's looking to buy it somewhere down here, you know, against these lows, but man, I still look at it as a very long-term bear flag formation that I know it sounds crazy, especially those of you that trade it, you know, or looking for a move down to 114 longer term. That's what the target would take us to. I don't know how realistic that is, but anyway, it's just technicals, just what the charts are saying to us. But what are your thoughts here regarding the yen and Kman? I'll start with you because you traded on Japanese desks for so many years. You have some opinions about what's happening with the yen. What do you think about the dollar yen here? And what
it's now at risk, I think, because you don't only have these US data, but you also have the handover between Ueda and Kuroda upcoming. You have a risk doing less good. Look at the yen crosses, especially look at the antipodians versus yen. It's a bloodbath, and there's likely, I would expect, some speculation coming up of what the new Bank of Japan governor may do. So for the time being, I'm very cautious. I'm actually, as people in the room know, and I told you as well, and you know, we're both a bit short Aussie yen as well, and that looks to be a very weak one right now. I'm not going to catch a knife in dollar yen right now. That's the only thing I want to say about this dollar yen right now, and then we will see. We will see what happens with the Bank of Japan later on this month. But whereas US job data can do a lot of damage in a pair like dollar yen.
Yeah, I believe, and just like you, I think the dollar yen can really be influenced by this weaker data that we're seeing. And again, I want to reiterate that this fall in yields. Look at the 10-year yield really quick. Just this is like a daily chart, but we can go over to the 10-year, like the bond market.
Testing critical support, the yields at the moment.
Yeah, and I mean, look at the 10-year right here. I mean, just big resistance. We start breaking above that, we're trading up at 120 in the 10-year. And if that happens, you know, yields are collapsing, and the dollar yen and other yen pairs might suffer as a result. You might have seen an alarm just went off on my euro yen chart, you know, while Kman was talking. This is pretty key support to me. You can see that we have a nice little AB CD move in the euro yen. So just so you guys can see it really quick. We're about right there, but we start accelerating through this support. Remember, these are all big triangles that have had, let me move this line, let me get rid of it just because it'll make it harder or easier to see. We've had some false breaks of these big consolidation patterns, like the triangles. You can see the pound yen, the guppy, many of you call it, big reversal at new highs this week. Aussie yen, you know, coming out of a big triangle. You got the Kiwi yen that's got a big wedge, triple top. We'll talk about that, you know, later. And the Canadian yen also probing some pretty big resistance here. You know, these yen pairs look vulnerable, and if yields continue to come off, you're probably going to see these the 10-year and the yen strengthen. Then, as Kman just mentioned, the changeover between what day is that between Kuroda and Ueda?
I think it's over Easter weekend. If I'm not mistaken, it's the 8th, 9th. So that's this weekend, right? That's Easter weekend. So for next week or already over the weekend, we may have some comments when he's taking over the baton, right? So yeah, we not too long to wait now. And
no one knows what to expect from him. He's such an unknown, which is it's going to be interesting if you hear like some wild ass like.
There's a lot of voices now coming out saying that we may already see something happening on the end of the month in the meeting, but he's an academician, and he has said that, and Kishida has said that they would work closely together with the government. So it's still a bit limit border to know what exactly to expect from the guy. I think Japan has no other choice than trying to normalize their monetary policy a bit. They can't stick with this one for this trade jacket. They have to let it go in some way. But how fast is going to be the key.
Yeah, Japan broke away from the oil pack, whatever that price cap was with Russia. It was reported that they are buying oil from Russia
as well, and above the cap, right?
Yeah. So the alliance, a pretty important part of it, Japan, and we'll see.
That's because Japan is a huge producer of commodities.
Oh yeah.
Just kidding. All right. So let's shift back over to Steve. Steve, what are your thoughts here regarding this data that we've seen, and you're seeing the stock market react? I mean, look at S&P futures right now. They're at the highs. I don't want to say the highs, but they're recovering from like the European hours. You can see that the S&P is starting to claw its way back. Stocks are liking this weaker data.
Of course they are.
Yeah. How long do you think this perverse action of the market's gonna stick around?
I think the market likes weak economies, as long as the weakness is not such that will lead to some kind of a big recession. The market is addicted to the prior monetary policy, which is super supportive. So for the market to feel confident that we're going to go back to the era of having this type of support, they want to see the economy. It's like a sweet spot. They want to see the economy weakening and staying fragile, but not, going over the top and, really rolling over. So that's what the market is hoping for.
I fully agree with Steve. Fully agree.
Yeah, I mean it's amazing when you say addicted. Remember, this is like when did Lehman Brothers collapse? What year was that? Stelios, or no?
September. Yeah.
Well, both of you answered and no one's answering. So Stelios, what were you going to say?
Well, it was 2008, right?
Yeah,
September.
I thought it was 2008. So here we are, we can say really 13 years, 14 years of just loose monetary policy. And finally, after almost my entire life, and actually my entire, I started trading in 96. I mean, I've never seen inflation the way it is ever. So, in almost 3 decades of trading, inflation finally rears its ugly head, and people still believe the monetary policy is going to revert back to what we've seen, the previous 13 years.
The problem is they're probably right. That's the thing.
Do you think that's a mistake for the market? What do you think, Stelios?
Sorry to interrupt before. Unfortunately, I think that's what central banks are going to do.
Really?
That's what they know how to do. That's the scary thing. I don't think we have another Volcker, right? I think they're going to revert to doing what they know how to do, and more easing and more of everything. By the way, you talked about 2008. Check out, I know I talk about it a lot and it's been going well. What was silver's price in 2008? Remember? I'll give you a hint. It was about $20. Where is it now? It's just above $20.
Yeah.
That
so what
tells
does
you
that
a lot.
show you about silver? Do you think it's a short here, or do you think it's a long? I mean, if it can't participate in the bigger move that gold is participated since 2008.
It will.
Oh,
It
you
will.
think it will? Okay.
Yeah.
I remember these moves in silver, and I remember these big moves. Like a lot of it would happen in Asia when it was very illiquid. I'd try to have dinner with my family, and we see these massive moves. But yeah, here's gold, obviously doing a little bit bigger of a trick longer term. Well, speaking of which, the analysis that came out of ForexAnalytix this morning regarding silver is, and I think is probably something that you guys should probably pay attention to, is we do have that triangle breakout point that comes in right around 24.25. So if as long as we can stay above that, this level right here, you can see this big triangle breakout point, right? I'm just zooming out a 4 hour as much as I can, which doesn't make any sense.
The fun part is that we were talking about gold and silver concurrently breaking out yesterday on the morning edge, and literally, what was it? Like, it wasn't even half an hour after we were done, both of them, just blew out of resistances.
Yeah. I mean, it's they were really, really bullish setups, setting up, and the pennant and the bull flag pattern for the gold market, and silver pushing right into that trend line resistance. So great call, Steve. Good job. So we just have a couple of minutes. Dale, what are your views going into here, especially with stocks? Just kind of, we got ISM coming up a little bit later. The stock market seems hell-bent on holding onto these gains. You got the yen that's starting to really look perky. You got the dollar index. It's it still is beat down, but it really is not hitting new trend lows. It still looks like, in my opinion, starting to form a little bit higher low. But what are your thoughts as we go into today's trade?
Well, I think the belly of the market is really looking weak. Stocks like Deere and stocks like CAT and the industrial ETF and some of the copper stocks. And I think that may have been it. I started selling S&Ps yesterday. I always take partials. I'd even welcome a retest of the high to sell more. I think that that this could be significant, this top. Because the most embraced narrative in the markets right now is April seasonals are the best. I'll get long late March and I'll sell in May and go away. It's too pat. I'm fading it.
Yeah. I think that seasonals are going to play a part this year, and I think it's going to be early, right? So I think you're going to start to see, that selling pressure really come in a little earlier.
That may keep people
year.
long when it's not working. Well, I'll stay long. April's going to be a good month.
Yeah.
So,
well,
I just think it's too widely embraced, the April seasonal story.
Right. Well, good point. And just to share with you guys a little bit of triple confluence that the S&P hit yesterday. If you guys didn't see it, this is something that if you're in the S&P,
also the copper action yesterday, I don't think is a great sign for global growth.
Copper is, well, and then you look at the Aussie too. I just wanted to say that the guys and gals in the S&P room have been really nailing it over there, but I want to show you all this confluence here of the 127% extension. You can see this, the last leg lower, the S&P of this leg lower, 127% extension, 88% retracement, channel resistance. So when you have a triple confluence like that, we got a nice reversal from there. So the make it or break, it's going to be right here around 40.75.
Yeah,
that's going to be
agree.
Yeah. So what the market does from there is going to be probably do or die for the bulls or bears.
Now NASDAQ 100, if you want to pull it up, Blake, has a shot for another high. I don't know if the S&Ps will or not, but you see how you have two up there. You have two drives about a week apart. Go to the high of the move.
Right there.
Yeah, there's one, there's two. We're pulling back after two, one more thrust, and look at the RSIs putting in lower peaks.
Yeah,
So,
you know, this was a confirmed high here,
right.
right there. But you know, it's the
last two
NASDAQ
are-
too, right?
Yeah, it's
You
only
start
one
you
to
start you start factoring growth concerns
Yeah.
to some of these tech companies, and
Well, let's let it, and the semis look like they're starting to crack, even
Yeah.
Nvidia. So
right. Hey,
I guess
I
I'm
know it's
bearish.
it's 30 minutes after the hour. You got your interview coming up really quick. Stelios, Kman, Steve, any last minute words for the folks out there?
No, just take extra care.
Yep.
With
And
your
I don't think it's a good idea given the data we have on Friday and the holidays and the low liquidity.
Yeah.
I think it's a
do-
very bad idea for unless you can avoid it or unless you are like deep in the money or whatever else, and you know you're willing to risk it, to have positions on that can, you know, really work against you.
Yeah, great recommendation. Kman, any last minute words?
Yeah, I can only support that, and we may not even as retail traders be able to work on many prices because the liquidity providers won't probably have as much liquidity themselves either. So be very careful, but I'd say, yeah, and I mean, look at risk, look at the rest of those job reports or whatever coming out of the US. They may be the driver for the dollar for a while. Also, I think the 41.5 is pretty important enough on the S&P. So yeah, keep a close eye on that one.
All right. Well, I want to thank our team for being here today. I want to also mention, if you haven't checked out the trader funding program, make sure you guys check that out, because if you want to learn how to, you know, how you can trade our money and our capital and not risk your own money. We have a lot of people that are in the trader funding program. And what happens is when you take an evaluation, you actually come into the ForexAnalytix community and you're inside of our chat room. So this way you're not alone. So here's what the ForexAnalytix chat rooms look like. This is the S&P room, which is extremely busy. It was busier than our general chat room yesterday in North American trade. So the S&P room is definitely a very busy place nowadays. Here is the general chat room. You have your Flowonomics room, which is your macroeconomics room, which Kman and Ryan usually hang out here along with other very intelligent people. Then we have the news and research room, the trades room. We're actually posting our trades. You can see I just took a loss in the euro dollar this morning. I take losses. I've actually taken a few losses, more losses than I wanted to this week, but you can see I took a euro dollar loss this morning, just about a half an hour before the data. But if you want to know what I'm trading and what other people are trading, you can do that right here in the trades room. So Dale, I want to thank you for hosting us as always and being the hostess with the mostest, and have a great interview today.
Thanks, Blake. I'm here in my jungle room, like Elvis.
All right. All right. Thanks, buddy.
I finally saw the movie, bro. You were right. It was great. All right. Anyway, thank you, team, Dream Team. Way to go again. I'm pleased to meet Dan McDermott today. Dan, welcome to F.A.C.E.
Thanks for having me, Dale. Glad to be here.
All right. So Dan, the chart man. Do you want to share your screen, Dan, or use a camera?
Let's do that.
Here
we go.
Screen? Okay. All right, Dan. So the chart man, why don't you tell us a little bit about your journey into the business, what you were doing, who influenced you for your technical trading? Did you have a mentor? Kind of get in a time machine and tell us how it began for you.
Sure. So I've been trading about 12 years at this point. Back in the early days, you know, I was exploring around on forums and Investors Hub and things like that, and just observing people trying to understand markets. I was back in college still at that point. And I, you know, recognized this one guy who was posting charts. He's more right than everybody else. So, you know, I kind of latched on to him. I want to know what he's doing, what, you know, he's seeing on these charts. And so for the next year plus, I just, you know, interacted with this individual, asked them questions. His name was actually Osprey on Investors Hub. And really, he just opened me up to the world. You know, it was a lot of self-directed education as well. But
who was he? Who was he?
Osprey was his name on Investors Hub. He
Okay.
mostly focuses on penny stocks. I started in penny stocks the first couple of years before moving up to the real world of trading after realizing what goes on in the wild west of penny stocks and wanting to avoid that. But
Okay.
yeah, it was a lot of observing, and then okay, he uses RSI a lot, so I'm going to study RSI and research it, and a lot of trial and error, of course, learning all the lessons along the way. But started to find consistency year 4 or 5, and I'd say because I started in penny stocks, I'm more of a momentum kind of trader. So I love I wasn't interested in cryptocurrency, but I see they're all at all-time highs in 2017, so I jump into that market, and the Canadian cannabis market in 2018. So I love jumping on euphoria and learn my lessons early to take profit along the way, to not be holding the bags. But loving markets still to this day, and mostly a day trader.
Okay. So would you say there's euphoria in the gold market now?
It's building for sure. I think we got to get the new all-time highs to see some real euphoria
Okay.
there. And I think that's with where we stand right now, that's inevitable in the next.
So all right, well, let's stay here with the S&P. So you use candlesticks, you use RSI. What do you use, since that's kind of my bailiwick? How do you use RSI?
So I love RSI in strong trending markets. So if you're in a strong uptrend, you're going to find short-term oversold conditions lead to longer-term higher lows. So for example, if you got a strong daily uptrend, oftentimes you'll see hourly oversold conditions mark the daily higher lows. So I use them, for bounce trades. I love bounce trades as well. If you're with the longer-term trend, and I use RSI to help pinpoint. It's definitely, price action and trends are my bread and butter, but the RSI is just one little piece of the puzzle.
Okay. All right. So we're looking at S&Ps right here. Under 40.75, you turn negative. Could I assume that, based upon the line that you have drawn there, that it could be a false breakout?
Yeah, I'm just watching that low of yesterday. Actually, I'm trying to get better at swing trading and improve that skill set, just because I recognize, to be a day trader and to be in the zone, it's a whole bunch of hours. And now that I'm on year 12, it's like, how sustainable is that going to be over the next couple decades? So in my IRA, I'm doing a bunch of swing trading, and, I go flat when I'm unsure. And then I have my bull lean and bear lean where I have my long-term no touch positions like SPY and things like that. But just yesterday, I went from a bull lean post FOMC after the bears proved nothing to me after the FOMC. And now I started grabbing some hedges yesterday, looking for inevitable daily consolidation that's going to be due here. And the big question for me is, does the NASDAQ join today? Because the S&P 500 started its consolidation yesterday, but the NASDAQ is still grinding these higher lows every day. I've marked this support zone, and you can see we just held it on what it was yesterday. That was Monday, and then held it on Tuesday. And so now it's in play again this morning. So the big question for me today is, does the NASDAQ join the S&P 500 in this daily consolidation?
Okay. And you have any pullback labeled right now as consolidation? What would make you concerned about the trend in the S&P, which most people are saying there really isn't one, that it's a range trade, that people have collars on or strangles on, selling 3,600 puts and selling 4,200 calls. So they're treating this market as a range. I can't find a trend.
Yeah,
where's the trend?
Honestly, this year, one of my superpowers as a trader is not getting attached to a bias. So I've really done a good job this year of saying, I have no idea. We could go to all-time highs, or we could hit new fear lows. I'm open to both possibilities, and I take it a day at a time. But on the S&P 500 here, we got these little higher lows. This is what I'm watching just on the way up. And we got a lot of space where we can form another one. So if we were to retrace, 3-4 days and create the space where, maybe it is just another higher low, but then we bounce and confirm a downtrend. Pretty much if we retrace, for a few days and give back over 50% of this leg up that we just saw here, that's going to create the space for, next bounce. Maybe we fail that recent high and then roll over into that daily downtrend.
Okay. Did the OPEC over the weekend report surprise you? Surprised me.
Yeah, I'm honestly, I'm mostly a technical trader, but seeing that take place definitely was a shakeup in oil and energy because, the energy sector had been so weak prior to that. It was one of our, lead bear sectors in the last couple of months,
Right.
but a big time turnaround and shake up. And yeah, it's, what the way I've been viewing the market is really most recently as post, banking situation, everything that was going on, because we saw a whole bunch of capital move in reaction to that, where we had, the tech sector and semiconductors and metals and even Bitcoin all responding bullish. And then we had obviously the financial sector weak, but IWM and, the energy sector was weak. Healthcare was still weak at that point. And so for me, it's just, do our strong names weaken to join the weaker names, or do our weak names strengthen to join the stronger names? And so one key thing for me over the next week or so is watching, the financial sector XLF here. Can we hold the recent low and confirm the first daily uptrend that we've seen in over a month? That would be very notable to me if bulls were able to pull that off. But I'm not holding my breath, because the regional banks, KRE, they're testing those fear lows, and they can very easily see new fear lows, which would dampen any hopes of a reversal in the short term in the financial sector, in my opinion.
What do you make out of stocks like Caterpillar, which is a big company, global? Yeah, that action where you just get a little ABC after the first break. It gave back all its gains in basically a day.
Yeah. So what I just did there is I go to the monthly, then I go to the weekly, and just quickly zoom out and then zoom in to see exactly what's going on. But the weekly, what stands out to me is the clear downtrend of lower highs and lower lows. And we did, set a daily higher low and higher high here. But as you mentioned, zero follow through, which has us looking for it to be a weekly bear flag. Anytime you change a trend with no follow through, keep an eye out for that flag. And so that's definitely on the table here. And yeah, just as you mentioned, the slow grind up, and then to give back 4 or 5 days of action in one day on some high volume, definitely a vote of confidence for the bears.
Yeah. So do you think stocks like this are some kind of, and what copper did yesterday could be a warning sign about risk?
Yeah, I definitely do. But for me, it's, there's so much weight in these major tech names, Apple, Amazon, Microsoft.
So
and
concentrated.
Yeah. And so that's really what I need to see roll over for there to be fear. If we want to talk, it's really rotation or fear. And we've been seeing some decent rotation recently, just with the healthcare sector finally coming off the lows. And so if we're going to see fear, what I want to see is all of our major sectors dropping at the same time, all at the low of the day at the same time. And that's healthcare, tech sector, financial sector. And we haven't seen that in a while here. And for me, it's when the leaders, when Apple, Microsoft, and Amazon start weakening, that's going to be when fear returns. And so until then, I'm holding off. I'm holding off from being too bearish as long as Apple's in this strong daily uptrend.
Well, Tim Cook must not use your candlestick system, because he has sold millions upon millions of Apple stock in the last few weeks.
Well, that's definitely worth paying attention to.
Well, I mean, I don't think it's publicized. I saw it, a trader buddy of mine posted it. So he must not trade with candlesticks or RSI.
Yeah. Or he's selling or he's selling into strength, which I'll never knock. If you're gonna take profit into strength, that's A-okay with me.
I wonder what he knows.
And really, it's the kind of thing.
Maybe he's worried about this visit from the Taiwanese president to meet with Speaker McCarthy.
Yeah, who knows? Yeah. It's the kind of thing where I look back, where we got the announcement of all the Fed officials, like, oh, there's a conflict of interest, so we're gonna sell all our portfolio up here, and then you look back in hindsight, well, duh, like should have shorted everything up there.
Yeah. So tell us a little bit about what you do at your company and what differentiates you from services, educational services. Tell us a little bit about your business model.
Sure. So we at the Chart Guys, we run a chat room community and we do the live streams. And one thing that made us different, really why I started the company, is I was in a chat room prior, and the individual who ran it was not really responsive to questions. Anytime there was a question, he'd direct you, to a paid course or something like that. But I love talking about markets. I love trying to interact with people as much as possible. So really just a hands-on approach where just a lot of availability of answering questions as trades are playing out and as the day is going on. And also, sharing all of our similarities outside the markets as well, to have that strong community aspect. And I've just learned so much from people, and people are learning so much from me. The fundamental aspect of things, and in investing in T-bills. I had never done that before this past year. And so just really sharing knowledge all around and having a good time.
How do you do it, Dan? Do you go right to the set up an account at the Fed? How do you buy your treasuries?
I've been going through Fidelity. I've been on the 4-week T-bills for a while, but starting to wind down on those and maybe look a little bit longer term. But I've also got commitment issues. So tying that money up for, months and months is definitely difficult for me to do as a day trader.
Okay. So it's like a fund. It's a, like 90-day paper. You are in T-bills. They're just not in your name. You're just buying a fund at Fidelity.
Yeah, that sounds about right.
Okay. I know a lot of people, they want to have the bills in their name. So
yeah, I definitely
do you worry
that.
about things like what happened at Silicon Valley Bank affecting your broker or your bank? Or do you think that was a one-off and we've got it solved?
I'm definitely, I'm always cautious of worst case scenario. So I do want to spread things out. And honestly, one thing I mentioned that I've dabbled in the crypto market over the last 4 years, but one thing that's kept me safe in the crypto market is my requirement of FDIC insurance. So that's kept me off of, the shady exchanges that have gone under. And a lot of people didn't, have that same mindset. And I think this is now waking people up, where a whole bunch more people are now talking about FDIC insurance that weren't before. So yeah, I spread things out. And honestly, I always...
What crypto exchange do you use that is, you get, it's not SPIC, but it's FDIC, like a savings account or check?
Yeah. I use Coinbase. Honestly, I don't love them as a pro trader. What their lack of progress over the last 5 years has been disheartening in terms of, their features and things like that. It's, clearly they are not trying to make the best trading platform out there.
Short that puppy into the gap. See the gap on coin? Let's talk coin for a minute. Yeah. You got any rally into that gap? But what was the gap down? Was it earnings?
No, they got a letter from the SEC saying,
those aren't fun.
Yeah, like, hey, you've been listed secured. I forget what it was, but essentially there's going to be a reckoning, whether that's a fine or whether they have to delist coins from their platform, who knows. But yeah, the amount of fees that I've paid them over the last 5 years versus what they're giving me as a full-time trader, it's not an even trade. Yeah,
that's a broken stock. Anyway, thought I'd just, another sector. Do you have a view on Bitcoin? Up here, I mean, it's been moving sideways, it feels like, for, I don't know, 2 months up near.
Yeah, it's got this, well, really, this was the catalyst of the banking situation. Right. And then we're grinding. I use the EMA 12, which is this red line. And so for me, I just love simple statements where I'm just going to say, as long as we're holding that level, I'm on Team Bull. And it's very similar to gold in the recent narrative from the banking situation. And you can see gold did the same thing, where gold was grinding that daily EMA 12 as it consolidated sideways. And obviously gold got its most recent leg up. So Bitcoin's trying to do its best.
You see what gold had though? I mean, you use RSI. Do you ever use it in this manner? You see the high in gold at 2009 in the RSI reading. Do you believe in using RSI for divergences? I like to have more than one. And for tops under 80. I don't know if this reading's under 80. But do you use RSI for seeing that there are non-confirmations and that there could be a turn coming?
To be honest, I don't. I use RSI a lot, and divergence is not one of the major aspects. It's the kind of thing where I'll make note of it. It just, in terms of a priority of how much weight I put in my decision, it is still.
It could bum steer you sometimes, divergences. Markets could diverge quite a long time until you're broke. So you still need risk management. So why don't you tell us a little bit about what people would have to do to get involved with you? If you want to show your website, this would be a good time.
Sure. So yeah, we're at chartguys.com, but really, what we pride ourselves in is the amount of free content that we put out there as well. So, on our website, we've got some courses and we got the chat room and all that. But if you find us on Twitter at Chart Guys or on YouTube at the Chart Guys, at this point we put out something like 7,000 videos over the last 8 years. So
Wow.
we love the mix of free content and paid content. And it's essentially, the people that want to dive in deeper, sign up to join the community, and those that don't have the time or don't have the commitment, there's still plenty of useful information, and we love to share it with all of you.
Okay, well, Dan, anything you want to wrap it with, like the most important thing you've learned over the last several years of trading that could help people
Hey, mate.
avoid? Yes. Hello.
I'm still here.
Oh, okay. I thought I heard Steve. Okay. So anything that you want to pass on to people that could help them avoid a landmine?
Yeah, so I mean, I need a stop loss on every single trade. I need a
Okay.
level that invalidates my thesis. I need to not be attached to my bias and recognize by, being humble and battling our egos by saying, I'm going to be wrong a whole bunch when I play this game. And I need to recognize when I'm wrong and, cut that loss before it turns into a big one.
Okay. And how about on missing trades?
So yeah, once you're in the market long enough, you realize there is always another trade. When you're in your first year, it's like, oh man, I missed it, and that's my chance. The amount of once in a lifetime opportunities I've seen in markets over the last 6 years, it's just, there's a lot of them. So just the goal is to stay in the game long term, and you got to preserve your capital to do that. And the opportunities will keep coming. I promise you that.
And I'm sure people have asked you this. They've said to me, Dale, how much capital do I need to trade for a living? And they'll say, can I do it with 10K? And I'll say, yes, if you want to live beneath an underpass. What do you tell what do you tell people when
That's
they
an extremely difficult question, just because everybody's, financial situation is so different. I started, in college as a minimalist where I was, I slept in a shed for a while, where I started with $3,000 and, lucked out big time into some bull markets that helped the learning curve. But it really depends on your lifestyle and how you live. If you've got a mortgage and a family, it's going to be a very different answer than if you're 22, fresh out of college with no debt, hopefully. But if you got debt, that's another thing. It's I am very fortunate that my dad helped me through college, because if I had debt, I wouldn't have taken the risk to try this and to do this longer term. So it's a very individualized question. But if you've got financial responsibilities or family responsibilities, you definitely want to have a secondary source of income, because that relieves a ton of stress. We know trading is very stressful. And if you have that secondary income, it makes trading a whole bunch easier, in my opinion.
completely agree. It's not life or death every trade if
Yeah.
you have that to fall back on. So Dan, it was great meeting you. And is Lori your most popular person on the team?
Oh, she's great.
All the
She is
guys
great.
want to hang out there with Lori.
Yeah, she came in as a student and I was her mentor, and now she's, very quickly teaching me things. So she's wonderful.
Isn't it great to learn from your students?
Yes, it's the best. It's a
great.
win-win.
Really, it's reward, and to see them take off, it's really as good as winning trade for yourself.
Absolutely.
All right, well, from one coach to another, Dan, great meeting you, and hope you have a great spring trading season. Tell Lori that we missed her, and we'll schedule for her to come back with us this summer. How's that
Sounds
sound?
good. Appreciate you a lot, Dale. Thanks for having me.
All right, you're now my trading warrior, brother. Like it or not, buddy.
All right, I'm in.
All right, Dan's in. Check Dan out. Where's the best place, Dan? Your Twitter handle is what?
At Chart Guys, chartguys.com and Chart Guys
Okay.
on Twitter.
Okay, so they do what they say they are. Thanks for sharing your charts with us today, Dan.
Thanks again.
Adios. Don't just count your pips, count your blessings, everybody. Have a great day. You could join the team in, let's see, looks like about 21 minutes, 20 minutes. You're welcome, Saloom, Sinatra, all you guys. Don't forget to sign up to be part of this community. You need a community to support you and trade with people that are better than you and you rise to that level. That happens in ForexAnalytix chat. Okay. See everyone later. Happy Passover. Yes. Same to you. Amira, happy Passover. Happy Easter to everybody. Good Friday. We won't be here. I'll always remember Good Friday for this reason. I was diagnosed with cancer on a Good Friday many years ago. So that was my Good Friday. Anyway, here I am talking to you guys right now. So, yes, I'm here. Yeah. All right, guys. See you tomorrow. Thank you, Mary.